Good afternoon. You're watching Businessworld Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Monday. It's a second straight day of declines for the index, slipping at the same level it did on Friday, inching lower by 0.5% to 7,203.44. That's already an improvement. Earlier in the day, the index shedding 1.1%, leading losses in Asia, but managed to at least pare back the slump. This comes, of course, after the country just logged its highest four-day increase in COVID-19 infections since November. That's close to 7,900 cases in the 4 days through Sunday. Total cases, in fact, in the country have now reached 500,000. Adding to the drag, travel orders to actually curb the spread of the new British variant has been extended to January 31. This after a case has already been reported in the Philippines. Contact tracing efforts so far by health authorities. According to them, only 7 co-passengers at least of the Filipino male who tested positive for the UK variant have yet to be traced so far. At the same time, we try to take a look at Asia. However, we're not alone on that front. The rest of Asia, a sea of red, save, of course, for Chinese and Hong Kong shares. Why is that? Of course, you have China reporting their economic data, beating expectations. In fact, China's GDP growing by 2.3% in 2020, the only major country expected to avoid economic contraction last year. The Asian superpower's GDP in the last quarter even emerged 6.5%, beating analyst expectations of 6.2%, signaling their return as well to pre-pandemic growth. If you try to take a look at how most of Hong Kong and Chinese stocks performed here, you have the Hang Seng up 0.8%. Likewise, you have Shanghai ending the day 0.8% higher, as well as the Shenzhen also increasing by 1.5%. But it's a different story if you try to take a look at the other major Asian indices here, the likes of those in Japan. Topics, as you can see here, ending the day down 0.6%. The Nikkei as well in the negative territory here, down by close to 8%. The Kospi, however, as you can see here, losing the most here, down by 2.3%. This following reports that outgoing U.S. President Donald Trump will actually restrict licenses to several Huawei tech suppliers. This somehow soured sentiment toward chip component makers in Korea, which then took a beating. Again, the Kospi down by 2.3%. But let's zoom in again on the local bourse, this time taking a look at our leaders and laggards. If you try to take a look at this chart right here, you have only 5 stocks here posting gains in the main index. The likes of URC, at least a day's biggest gainer, up 1.5%, followed by Aboitiz Power, up 1.2%. This as Maybank initiates its coverage on AP, giving it a recommendation of buy with a price target set at 33 pesos a piece. However, also, if you try to take a look at a majority of our losers, a number of them are our lenders here, the like of Security Bank here, down 1.4%. There's also BDO here, second worst performer, down by 2.25% here. In fact, the whole financial counter slipping by 1.3% on Monday. We have some latest word here from the Bankers Association of the Philippines President Cesar Consing. He did say, speaking at an online forum, he's quite optimistic, though. He says that lenders will actually recover from the pandemic faster than how they did in the Asian financial crisis. He attributes it to lower interest rates, higher capital, and a more stable economy. He says bad loan ratio may actually reach a 6 to 7% high this year compared to the 4% back in 2020. But still, when you compare that during the Asian financial crisis, we're in a bad loan ratio was actually at 20%. Let's see how those comments from Consing might actually help pick up sentiment for the lenders tomorrow. But one stock, but more updates in the banking space here, this time from the central bank. Just now, you have the BSP saying the Deputy Governor Francis Dakila will now, for the meantime, act as BSP officer in charge. This is Central Bank Governor Ben Diokno is still trying to recover from a medical procedure. This, of course, coming from a central bank statement. As per the BSP, Diokno was involved in a minor head accident, but so far, at least, the operation has been successful, at least according to the latest report here from the central bank. We'll try to give you more details as soon as they come in. But let's focus on one stock here, not in the main index. I wanted to divert your attention here to Philo Drill. They are ending the day jumping by as much as 46%, as you can see in this chart right here. The oil and gas explorer even climbed to as much as 38% earlier in the day, its highest level since February 2015. This comes after the Energy Department approved their appointment as operator of Oil Exploration Service Contract 53. The Explorer now has an 81.48% stake in the contract. The other stakeholder, Anglo Philippines, which has an 18% stake in SC53, also climbed by as much as 30%. Now, at the same time, also, let's try to zero in on other stocks here. The likes of Meralco ending the day almost flat at 297 pesos apiece. The company is asking the Energy Regulatory Commission to approve its refund request worth nearly 14 billion pesos. This amount represents over-recoveries based on actual weight average tariff, or AWAT, charges from July 2015 to November 2020. The ERC announced that it would hear Meralco's petition in 3 separate online Zoom events starting February 16. Meralco head of utility economics Lawrence Fernandez said that AWAT was based on the company's distribution charge, which according to him has increased during the pandemic. He also noted that distribution charges went up during the second half of 2015. Also opening the week in the red is Century Pacific. That stock is down 1.6% to 18 pesos and 20 centavos. News of the company keeping its capex at 2 billion pesos this year, similar to its 2020 watches, hasn't done the stock much good. Century Pacific did say that it will use the fund to expand production to meet resilient demand. It said that full-year revenue growth for 2020 may be at 20%, while a 10 to 15% growth is expected this year. The company said it expects a recovery in its tuna export business and increased demand for its coconut export offers. Century Pacific sees robust demand from the EU in its branded exports business. The company's Unmeat, a plant-based alternative to its meat products, is set for retail launch in the next few months. Now, PLDT is setting its eyes on more innovative offers this year as it expects consumers to retain their digital lifestyle amid the pandemic. PLDT Chief Revenue Officer Alpan Lilio notes that while the arrival of COVID-19 vaccines may allow a return to face-to-face interactions, consumers may still prefer an online lifestyle due to its convenience and safety with contactless options. PLDT said it has started work on a cost-efficient and customer-centric product portfolio. Exciting things are in store, according to the chairman himself, Manny Pangilinan, who tweeted a much-awaited partnership to be launched later this afternoon. We're keeping our eyes on that, but it may be a good day to wear purple. Now, here are other headlines we're keeping our eyes on. The Philippine government is looking to secure an additional $1.5 billion from multilaterals to fund the country's pandemic response. This is after securing at least $13 billion in foreign loans and grants just last year. Multilateral lenders like the Asian Development Bank and the World Bank have approved billions in COVID-19 relief for the Philippines, while other international agencies have pitched in no less than $100 million each. The government is setting aside 82.5 billion pesos for the max vaccination program. The goal is to immunize at least 50 million Filipinos against COVID-19. 12.5 billion pesos will be sourced from the Bayanihan to Recover as One Act, as well as a portion of the Health Department's 2021 budget. At least 50 private sector groups are pushing for the immediate enactment of the CREATE bill. Lawmakers have yet to convene in a BICAM panel to reconcile provisions. The group involved representatives from the banking, real estate, insurance, outsourcing sectors. Members from various foreign chambers also joined the call. They noted that every delay comes with a risk of losing more jobs and investments. The measure seeks to reduce corporate income tax to 20% by year 2027. It also aims to rationalize tax incentive schemes to make it more time-bound and performance-based. Trade Secretary Mon Lopez has already asked a House committee to include CREATE among priority measures this year. Now, small business owners experience and continue to experience heavy beating due to the pandemic, but is there reason to believe that the sector might bounce back this year? Now, to talk about that, we have George Chua, Chairman of Don Bosco Technical College's Entrepreneurship Program. Good afternoon, Prof. Chua. Great that you could join us this afternoon, sir.
Good afternoon, Jes, and all of your viewers.
Okay, sir, maybe we start off by at least giving us an idea. How badly was the sector hit in 2020 due primarily to the pandemic?
Well, it's not an across-the-board thing. We've had situations whereby some industries fared well, whereas other industries did not do as well. As an example, we might say the online businesses have done very well because people have converted their purchases online, whereas we might say that the hospitality, entertainment, restaurant businesses did not do as well. They've actually had reversals, and some of them did not were not able to reopen back their businesses.
But would you say a lot, of course, of the businesses, that these small businesses, have actually fast-tracked their adoption of online means? Do you think that somehow most of the sectors have managed to at least make that quick adoption towards online means?
Yes, actually, that's true. You have neighbors and friends who have been doing a lot of these online selling of various things from home baked products, desserts, and things like that. But at the same time, the government had announced that they will be requiring that these small businesses be registered and at the same time pay taxes and so on. So that has put a dampening effect on all of that, considering that the requirements can be quite tedious for people to register because the threshold amount for registration is kind of small.
Okay, moving on from there, earlier in the broadcast, we were talking about CREATE. How much of the sector's recovery do you think hinges on the timely passage of CREATE and FIST?
Well, first of all, the policy of government is revenue neutral, meaning to say uh, they give up something on one hand and they take away in another hand. So the revenue effect is neutral to the government. So what that means is that the people that will benefit the most are people who make money. But if you don't make money, you don't earn anything. All of these things are irrelevant to you. And since we have a high percentage of the population that have lost their jobs um, over the quarantine period, it seems that that's not really creating so much impetus for them. And in a way, the businesses that have lost their momentum, the slack has not been fully picked up by the businesses that are doing so well. So it's still going to take a while. For example, the big sector that has been affected has been the automotive industry. Obviously, if you don't have a job, you're not going to be buying a car. And at the same time, the banks have also been slowing down their auto loan financing because of the credit quality of the consumers uh, taking advantage of these auto loans.
But would you say that these legislative measures would somehow boost at least the confidence of small business owners? We're talking about CREATE and FIST.
Well, like one of the highlights of that is of course the lowering of the income taxes, no? And the thing there is that obviously you benefit from the income tax if you have an income, but some of these small businesses are really below the threshold of even VAT registration. So the impact to them is not going to be, they're not going to be the primary beneficiaries of these, no, because these people are what we might call marginal businessmen, no, and that's what we really want to have because what we want to make sure is that instead of being a burden to the government, these people are able to uh, make their own way, no? So to me, the impact of all of these things is out of sight and out of mind for a lot of these marginal entrepreneurs.
Okay, not something that at least they are zeroing in on for the business owners or for the small business owners at least. But this time around, looking forward, how much of the sector's confidence would actually latch on the government's vaccination program? Would you say, what do you think, what is so far the overall sentiment here from the sector regarding the government's plans for the vaccination rollout?
Well, we need to have a more concrete plan and a more substantive information on the effect of the vaccine. As you may be aware, there's a lot of social media information going around saying negative things about the vaccine, that people have died from this, they've had side effects and things like that. So that does not really build up any sense of confidence. And at the same time, the government itself does not have a firm schedule of the availability of these vaccines. They are just some guesstimates. So unless we are able to roll this out in a higher number so that we can actually open the economy, then the effect of talking about these vaccines is not yet going to be fully felt. People will only be confident once the government itself is very confident about their timetables, about the efficacy of these vaccines, and of course, how many percent of the population is actually going to be benefiting from that. Because, like the Sinovac vaccine has only a 50% effectivity rate, and while the others are over 90%. So all of these things we need to spell out for the general population.
All right, a more concrete plan from the government in order to somehow boost the sector's confidence. Thank you very much for your time this
Thank you.
afternoon. George Chua, Chairman of Don Bosco Technical College's Entrepreneurship Program. Thank you, sir.
Thank you very much.
And those are the biggest news this trading day, January 18, 2021. Catch Business World live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News.